Hi everybody, welcome to another update on the stock screener. Someone suggested me to look at the silver miners. I really don't like silver miners, but I will make a case now that you will lose money guaranteed if you buy silver miners. So just to tell it again, the costs consist of AISC, but you also need to include interest expense, capex, and taxes. This is what most people forget. There are many more costs than the all-in sustaining cost. So let's see if there is a silver miner that is actually profitable. First one, Adriatic Metals. This is more a zinc mine, but it has some silver in it. Actually, this is one of the better silver mines that I could find. Stock price has gone up almost a double in a year. So this is a very good company. Break-even cost is at $8 per ounce. That's very cheap. Is there any upside at current silver prices? Yes, there is maybe 20% upside. So you can all go buy it right now. A very cheap company. First Majestic Silver. This is one of the worst companies out there, but many people like it. I don't know why. Maybe it's because of the CEO. But they have all been losing money from $9 to $6. That's about 30% down. And you know why? Because the break-even cost is at 24, including all the capex. So they can't even make money at this silver price. Even if silver goes up to 30, you're guaranteed to lose money because the valuation is too high at 1.6 billion market cap. So this can easily drop 30% and go much lower. So avoid this company. Avino Silver, one of my favorites, has actually been flat, up a bit over a year, so not bad. Break even is currently very high at 30, but it will come down to 20, and then it can go even down more to 15. So this one has hope if they can bring that new mine online. So it also has a very high leverage to silver, as you can see here. At current silver prices, there's not a lot of upside, but if you wait long enough, I think this can double in price from here to here at the current silver price. But you will need to wait a few years, 3 to 4 years, for that to happen. So if you like silver, I would keep Avino Silver in the portfolio. Aya Gold and Silver is one of the lowest costs silver mines in the world. It's pure silver. So if you want a pure silver play, then Aya Gold is good. So actually this should be Aya Silver, but they are called Aya Gold and Silver. So break-even cost is around 12. If you take into account all the capex, not bad. So this is a company that will probably make a lot of money. The problem is, and that's a big problem, that's the market cap is already 800 million. It's already 800 million, and there is probably a lot of downside in this company. And you can see that the stock price is going down from 8 to 6. That's a lot. That's 20-30%. I think there is more downside because it's overvalued. You need to wait until 2024 to get this upside in production. And even then, it's still overvalued. So, yeah, I like this company, but it's overvalued. Discovery Silver is one of the favorites in the exploration space. Problem is that this will only get into production maybe in 2028. It's too far away. But the break-even cost is good at 16. So they will be making money. And there is upside in the share price. It's only 200 million. Can easily double, triple if they get into production. But yeah, it will take a lot of time and investors don't want to wait that long, so share price is coming down. Endeavour Silver, I don't recommend this one. It's overvalued. Break-even cost at 30, 22 to 20. You are flirting with the silver price here, so they probably cannot make a lot of money. Share price is flat. I expect it to underperform. Unless, of course, silver goes up, then maybe it can go to fair value at some point, but at the current silver price, it's not going to do a lot. So there is downside in Endeavour Silver. Gatos Silver is actually up on the year. Break-even cost is at 18. It's good, but they had some problems with their mine life block model, so investors have lost confidence in this company. But actually, it's not a bad company. At current silver prices, there's a bit of downside, but at least it's a profitable company. So I like Gatos Silver. Just watch out for the mine life. It could come down, so watch the production. But this is a good candidate. Guanajuato Silver, yeah, it has come down, cut in half from the top. Break-even costs at 24 to 21. You're flirting with the silver price here. So if silver goes down, this company cannot make any money. So what are you going to do, right? It's also overvalued at 100 million. So there's downside at current silver prices. So you need to have silver going up to actually get to fair value. So not a fan of this company. Hecla Mining. Yeah, Hecla Mining has a break-even around 22. That's pretty high because they have a lot of capex. So this company cannot make a lot of money. And it's overvalued, completely overvalued. 3 billion. The reason why it's so overvalued is because they have quite a lot of resources. They have a lot of silver. So in the long run, they could increase the production and reduce costs. But okay, currently, I don't see a lot of upside. So avoid Hecla Silver or Hecla Mining. Max Silver, favorite of a lot of people, but I'm not convinced that this is a good investment. Break even is at 10. That's very low cost, so it will probably do well, have earnings. The problem is that it's already trading at 1 billion. There's downside risk because of overvaluation. Even if silver goes to 30, it's still overvalued. So I would avoid Max Silver, and investors also think that it has gone down, actually almost cut in half from the top. So not a good one. Santacruz Silver, Another pump stock has not done well, from 0.3 to 0.2. That's 30% down. This is a very high risk stock. I think this can go bankrupt very easily. You are currently at 23 silver. If this keeps on dropping with the zinc price, for example, this one can go bankrupt very fast. If it goes up, of course, with the zinc price, because this is more a zinc miner, then of course there's leverage to the upside. It could double easily. It could go bankrupt easily. So you can play this, but I'm not going to do that. I want to buy companies with high margin and undervalued with growth. I'm not playing the leverage play with low margins, because if you're wrong and silver goes down, then this company will go bankrupt. So no Santacruz Silver for me. Silvercrest Metals had a huge drop of 20 to 30% last month. That's because their costs went up, actually doubled the costs, and production went down. So here you can see it. This is the previous curve with a break even of 8. Very good, but they did an update and the break even has doubled to 14. So now this is a high cost mine with break even cost at 14 silver. Still very good. I don't think this company will go bankrupt at 14 break even, but yeah, you can see that the share price has fallen because of this. Now, the market cap is at 700 million. So I don't see any upside here. This is going to drop probably 30% from here because there is no upside. It's overvalued. Compared to the gold miners, the silver miners are pretty overvalued. Silvercorp Metals, another polymetallic mine. It has some silver. It has actually done well. It's up on the year. 19 break-even cost. Not bad, but also not good. And is very overvalued. So I expect this to continue to drop because it's too overvalued. So do you see the theme here? All the silver miners seem to be overvalued. Here you can see a conclusion on the break-even costs. And visualized, it's like this. So silver is currently at 23. If you draw a line here, you can see that none of these silver miners actually make money, with some exceptions like Max Silver, Silvercrest, and Adriatic Metals. So if you want to buy silver mines, you need to choose the companies that actually make money, and that's only these three. And they are overvalued. This one is overvalued and this one is overvalued. So there's only one that's buyable, that's Adriatic Metals. Over time, they can reduce their costs, or they are going to say that they reduce costs, but in reality, it typically doesn't happen. But okay, you can buy those that reduce the cost, like Avino Silver. I have high hopes for this one. But other than that, I don't see many candidates to buy. So here you have the break-even cost per year. Buy the ones that are on the left side. There's just one, Adriatic Metals. I would buy it, but I see more opportunity in some gold mines. Avoid the ones on the right, Endeavour Silver, Santacruz Silver, Hecla Mining, First Majestic. These need to be avoided because they can't make any money. So that was the conclusion on the silver miner break-even costs. Conclusion is avoid the silver miner sector. And I'll see you in the next video. Bye.